Hi, I'm Liam J. Jones, General Partner at Lonafy Capital and Head of Capital Strategy and Investor Acquisition. Now, over the past several years, I've helped raise and manage multi-million-dollar allocations across accredited investors, family offices, and institutional allocators, and that's all with a single focus. So capital preservation through fixed yield private credit strategies. Now, my background blends private credit, capital structuring, and institutional partnerships, and really today, I want to share a few key strategies that we use at Lonafy Capital to effectively raise capital for these fixed yield vehicles. I'm going to start with point one, and I'm starting with risk transparency and not yield headlines. Because one of the biggest mistakes sponsors make is leading with yield instead of risk. And really in today's market, sophisticated investors, they're not just asking how much, they're actually asking how is my capital protected? So we lead every capital raise by showing allocators how our underwriting models work, how we integrate deep learning artificial intelligence algorithms into risk controls, and how cash flow waterfalls prioritize principal before profit. Now, when investors understand how risk is governed, that yield, it really just becomes a byproduct of trust. Point two, tailoring the story to the allocator. Raising capital for fixed yield credit isn't just one size fits all. You know, family offices, they think differently than institutions, and accredited investors, they have different time horizons and even due diligence priorities. So at Lonafy Capital, we actually segment our investor communications to align with each audience. Really, these institutions, they want a portfolio level data set and they want stress test scenarios. Now, family offices, they often actually want clarity on the real economy value of the receivables. So you got to tailor your capital story to the allocator's lens, and that way you'll significantly shorten your funding cycle. Now with point three, building a repeatable allocation process. Raising capital it isn't about solely the pitch, it's about the process. Investors actually want to see a disciplined structure for how you intake, for how you deploy, how you monitor, and how you report capital. We've created a repeatable framework at Lonafy Capital, and that's clear documentation, that's clear reporting, and most importantly, direct access to our capital team. This builds a lot of confidence, and more importantly, it builds long-term relationships, which that's really particularly important in evergreen structured vehicles. If you're raising capital in today's environment, it's just not enough to have a strong yield. It needs to be backed by strong governance, by strong communication, and a structure that investors can ultimately trust. Now at Lonafy Capital, we believe transparency builds that trust, and ultimately trust raises capital. Thanks for watching. And if you're exploring allocation strategies or you want to understand our fixed yield structure in a bit more detail, then feel free to reach out.